Good day everyone, Les here, Chief Analyst of BG Trading in Australia, and I hope you are well. Today is 26th of February 2024 and we're going to be analyzing Kogan, Zip and Brainchip. Three stocks that has moved quite substantially. All of them in fact are trading at the former levels. We want to take a look whether the rally was sustainable or it was just potentially a hype in the market, what's happening, and whether it should be time to be locking profits or maybe keep moving with the stock. So let's have a look. Just want to remind you, this is not a financial advice, just as from BG Trading, sharing with you how we apply our strategies together with our VIP members to chase you 20 to 40% profit within 1 to 3 month time. Yes, we have been very successful over the last 4 months just applying this strategy. We've been running our business for the last 4 years and we have been taking a lot of VIP members on board, teaching hundreds of people how to avoid doing the silly mistakes like buying stocks at former levels and how to protect their positions using stop losses. We're very proud of what we do here, and we're going to keep moving forwards, bringing potential opportunities of stocks that haven't actually rallied and has potential to rally. So the first one is Kogan, which the SX code is KGN. This is a stock that we covered in our video about 1 month ago right there, and we shared the opportunity with you. We shared that Kogan was a buying opportunity right there when we saw that on a weekly chart we saw this a bullish engulfment. Let's just take a look here. Yeah, bullish engulfing here. And that was the trigger for the next rally. Then obviously that's why we decide to jump into the stock, because we're looking on the daily chart. We saw a bullish intersection level 2 right here, which essentially means the candle, the green candle crossing the yellow line. And then obviously that was confirmed with a bullish intersection level 1, which is the EMA, the yellow line crossing the red line, and that's when we buy. And furthermore, we are buying at the levels of technically fair price for the long-term trend as well. So we're not paying too much for the stock in the short term and not in neither on the long term. So that's exactly how we want to make our entries generally here at BG Trading. That's how we do. And then obviously today, then we had this rally, about 20% rally, and today with this very good result, some of our members they could start locking 40 to 48% profit, and we even shared this here on with you guys. So our entry was at $5, and then it's currently trading at $7.47 right there, as you can see, $7.40 at the moment, as the market is currently open. Then we have the BGS 20 targets at $6.46. And then in February, we gave members the opportunity, because we were increasing our position. We gave members the opportunity to increase the position because the stock was trading at technically discounted price, and we have the good prospect from the fundamental aspect of the company. And then what happened is the stock went up right there, and then obviously today came up the opportunity to lock in almost 50% in essentially pretty much in 1 month, which is way better than term deposits. I always like to compare that, because low risk term deposits, and then if you buy on the stock market the right stock at the right time, it's also reasonably low risk as well. Obviously not as low as term deposit. So you need to know what you're doing as well. And then what we did, we just set up a new target. It's going to be our long-term target here. I'm not going to share with you because that target is just for our VP members. But this target's based on the fact that the company grow its revenue in the first half of Y24, according to today's report, the gross revenue modest 10%. However, the EBITDA is now up by 182%. It's pretty much the earnings before depreciation amortization. So 182% up, and the net profit after tax. That's what I normally look at. That's what I like. Net profit after the tax up by 136%. This is a huge result, and obviously the market acknowledged that, and that's why the stock is up 20% today. Stock is up 20% today based on an excellent result, and therefore this ascending channel here that we saw in the last video, which we wanted to buy at the bottom of this ascending channel and sell at the top, the fundamental is now suggesting that we're going to have a breakout of this. We already have here, but sometimes could be a fake breakout, but we strong now inclined to believe that we are having a breakout right here from this ascending channel, which means we could have the stock moving further to the next level. When I normally say the next level means that we could see a similar sort of range to the upside, which would bring Kogan all the way from now towards $9 pretty much. It could go to $9 within the upcoming months based on this financial result. So a very positive result. This is a sustainable rally. That's what I'm talking about, a sustainable rally. A lot of those rallies are generated by hype of the stock in the market, mostly caused by some hype in the sector or some other things happening in leading companies in the US. This is not the case. These companies actually, the numbers are speaking by themselves. They are improving and they are really, really good. So this is definitely a hold. And even though the stock's trading at the formal level, I wouldn't be buying now, because obviously our strategy, BGS20 strategy, doesn't let buying at the formal levels. But this is definitely a hold, and could reach anything between $8 to $9 in the short term. Now let's move to the second one. This is one of our biggest holdings, which is Zip. ASX code is ZIP. With Zip is different story, because the company hasn't yet reported. It's gonna report this week. Now the net profit after tax most likely is not going to happen in the first half, and most likely is not going to happen in the second half. Maybe happens in the second half, we don't know yet. But the company, the truth is a growth stock. They're still trading at a net loss. Okay, and the rally from the technical aspect of this company, the rally has been now very sustainable, because you can see like multiple higher lows and higher highs. And then now it's suggesting that we could see a further breakout there. If you go to your platform, most of the analysts' consensus is the stock worth about 82 cents. So if you go by the consensus, you probably would have sold already. It's overpriced as per the analyst. But for us here, we backed up our own view on every stock. For us, we are considering the following macroeconomic circumstances. So we are entering into a positive outlook for Zip, and I said that in the last videos. If you're following us as well, if you are VP members, you know what I'm talking about. The macroeconomic outlook for companies like Zip is very positive, because we're expecting interest rates cut, several interest rate cuts over the next 12 to 18 months. And the market is generally will be pricing that into the stock. And that's what happening here. Last time when we had interest rates hikes, that's what happened with the stock. We are on the opposite now. Remember COVID, we had the interest rates cut, then the stock went up all the way from $1 to $14. And then there was a huge growth expansion as well that Zip was reporting. Wasn't sustainable anyway, we all know that. But what I want to say is, we are now on the other side of the cycle, where we should be holding the stock and not be selling. Whereas here, a lot of people held the stock on all the way over the interest rates monetary tightening, and then they lost a lot of money. But for us now, we hold the stock on this way. Now, we did set up quite a few BGS 20 targets for members that want to lock in the profit. So we had a BGS 20 target just under 49 cents. Then we had another BGS 20 target just under 78 cents. And but we wanted to hold the stock, and if you've been following us, we are holding a substantial amount of, at least for us, of this stock. And we wanted to hold because we have been seeing a very constructive pattern here. And every time the analyst puts targets, they keep reviewing, increasing the targets as well. And as you can see here, there was a breakout just above the target of the first target of the analyst, and then another breakout above the next target. And I'm pretty sure they will review the target tomorrow after the report, if the report obviously comes in line to our expectation, which will show further growth on EBITDA margins for Zip for the first half of FY24. So for us, Zip is this has been one of the few sustainable rallies for Zip over the last 24 months, and we are very positive about this particular stock. We obviously shift from BGS 20 strategy, which we set 20 to 40% targets, into a strategy that is a higher risk. We call that BG trading strategy, which essentially, if you have done our online course, so you know that BG trading strategy essentially holds the stock as long as the candles are trading above this yellow line here. If the candles are trading above the yellow line, just keep holding the stock. Could go a hell lot of higher than this. But if we have something like this, then that's when you gotta be looking at to trim your position, okay, or even adding up if the fundamentals are favorable, okay, if the fundamentals are favorable. This is where some of our VP members had the opportunity to buy more, or actually to enter again, because the stock came down to what we call technically discounted price, just under the red line. It's 48 cents by memory. I remember exactly when that happened. Yes, 48 cents, just under 50 cents. We add up another 50,000 units on our holdings right here, and we kept holding Zip for the following 2 months, and now we are up to 93 cents, which is pretty much 55% from our average up amount of Zip. Okay, so if you have an average up here, we would be probably over 100%, 150% now, but we have averaged up. And then this is one of misconception in the market as well. A lot of people tend to average down, where you should be averaging up stocks with high quality, or stocks that are going up, so to take advantage of the upside movement. It is in uptrend. We don't know what's going to happen this week with the fundamental report being released, but at the moment the chart formation suggests a positive reaction, and it's being very bullish at the moment. So we keep holding as long as this candle's trading above the yellow line. Now let's move to the last one, which by the way, I just want to quick share here. With Zip, you can come to go to ASX as well. Take a look on what's happening with the fundamentals as well. As you can see, revenue keeps increasing, but then also now the net loss has been increasing. Has been decreasing, and that's exactly what we want. We're expecting the net loss for FY24 to be just like between 37 million and zero, maybe around $10 million net loss, and then FY25 break even, or even be a profitable company, especially with monetary easing that we might see from central banks around the world. So positive prospect, sustainable rally for us, and for us is a holding on Zip. I wouldn't be buying now because it's a FOMO area, FOMO level now. It's too late, but it is a hold if you're holding. Now the last one is Brainchip, BRN. So this is one one of those weird cases that stocks start rising like crazy. And in fact, we had a rally of, I'm just gonna measure this because that's a huge rally. We had about a 230% rally on this particular stock. But the difference between this rally and Zip's rally is this is resemble a rally that we had in Zip right here last year. Let me show you what happened next to it. I'm back into Zip. So that's what this rally here resembles this rally here. When it goes way too far in the straight line, that's very dangerous and generally follows by a big drop. Now, unless something really compelling happening behind the scenes with Brainchip, and I've seen that over and over again, there's nothing really, even the company came up in the market and said that there was nothing that could alter the share price. About last week actually. Then I can only assume this rally was generated by the hype on the AI sector, especially the Nvidia corporation reporting huge earnings. And then my only suggestion is that people in Australia asking themselves, why is the next similar thing in the AI? Company that produce, have IPs in processor, and that is Brainchip, and also another stock that we covered last week, which is Webbit Nano. But I'm not gonna put it here today. So yeah, that's the hype, but nothing really happening. The fundamentals are pretty weak still. They came up with Akida 2.0, the next generation of Akida processor, which is ready for clients to use their IP. However, this is a very, very steep rally, like exponential, parabolic rally. I don't like that, and I wouldn't be buying now. Like if you are a holder, I probably would be holding using BG trading strategy as long as those candles are trading above the yellow line. I don't see from the fundamental aspect this company to have this sustainable rally. Even because if you go to the numbers, you can go to the latest update, quarter update, and it's pretty weak. Yeah, that you can access all this information here. I already looked at, and I'm gonna look at now again. But it's very weak, so just be careful. And it's likely that the share price will consolidate somewhere. Okay, I would be very careful with Brainchip right now. Wouldn't be buying, just holding, but with probably very tight sort of stop loss in order to protect profits. Okay, so profit trigger right there if you need to protect your profit. Okay. That brings us to the end of the video. Hopefully you enjoy. Thank you very much for watching, and I'll see you in the next video. Bye.